What's up, weirdos? What's going on, guys? All right, so nice little afternoon pump action. We got Bitcoin trying to get above support. See if we can hold above here. We got to get back above this blue line at $116,445. We are about $150 below that right now, $160. Can we get above and close above that blue line before the end of this day? Well, we'll find out, guys. We will find out. We went all the way down below this support, but all the way back up. So that's what I'll be looking for. We still have, 4 hours and 45 minutes until the daily candle close. So we'll see what happens. Lots of time to either move up or move down. I will be doing some DCAing this afternoon. Keep an eye out over on the Patreon for my buy alerts. Guys, if you want to know what I'm doing in real time, you got to be a part of our community, guys. It costs a price of a cup of coffee. Don't be a weirdo. Check it out. One super chat to get into here from Matthew, my guy, my brother, always supporting the channel. Just dropping some cheddar. I appreciate all you do for me and this wonderful community. Thank you so much, man, for your support. Not a lot of people here today. Holy smokes. We got 113 people. Holy smokes. 27 likes, guys. Let's get the likes up. Let's get the algorithm pumping. We have been shadow banned on Crypto Future by YouTube right now, probably because of some cuss words that I said over the last week or two. So we got to beat out the algorithm, guys. You got to hit the like. You got to comment. You got to subscribe. We got to beat out this algo. We are being shadow banned right now. So help a brother out with that. Let's get into the chat. Nia, how's it going? Happy Monday, Rob. Your favorite day of the week. Yes, it is my favorite day of the week, guys. You know I love Mondays, whether I'm sick, whether I'm tired, whether I'm sick and tired. I love my Mondays. You guys know it. You got me there on your inverse chart today. Yes, I figured it would shake loose a little bit of those bears, right? Give them a little bit of a shake, wake them up a little bit. William, good to see you, brother. Good to see you, my man. One of the first ones here as always. Sharon, what's going on? I smashed the like button. Thanks. Blessings, John. Blessings to you too, my friend. Strawberry Dragon in the house. Finally catching the correct time, not the tail end. There you go. Yeah, I know it's hard because I know for a fact that YouTube is not sending out the notification that I'm live right now because I had my phone, one of my phones, subscribed to the channel, and I was waiting to see if it sent me a notification, and it did not. So I know they're shadow banning me. Guys, make sure you hit the like and subscribe. 134 people here. 35 likes. Let's keep it going, keep it growing. Big things popping, little things stopping. Help the channel out, guys. If you support me, click that like button. If you don't support me, click the dislike button. Whatever, right? It's all good. Mario, what's up, buddy? Just playing just a bunch of weirdos. Let's get this money. Hell yeah. What do we got? Strawberry Dragon dropping some cheddar. Now, I also believe Monday is a liar. I told you so. I told us so. Absolutely. Monday is a liar. What else do we have? Kizza, what's up, buddy? Hope all is good. Yeah, I'm good. I'm just a little sick still. If September is the same as August, what would your thoughts be? My thoughts would be aggressively accumulate and be patient. Those would be my thoughts. It's not a matter of if altcoin season is going to happen. It's a matter of when altcoin season is going to happen. Actually, one of my favorite YouTubers, Colin Talks Crypto, he actually did a video this morning that I recommend you guys go watch as well, where he mentions in the tail end of the video about altcoin season, and he says the same thing. It's not a matter of if, it's a matter of when, okay? It will happen. It's just patience. That's all that it is. Candyman, what's up, buddy? Doctor asked if obesity runs in my family. I said, no, nobody runs in my family. Well done, brother. Well done. I run in my family. I just ran 1.5 miles so far today. I got to add more to it, though. I'm trying to sweat it out, right? Sweat out the cold. It's a me, Mario. What's going on, brother? Dave, bringing the heat, man. Killing it. Keep it coming, brother. Absolutely. Jared, super thankful for these last chance dips. Yes. Quentin, what's up, buddy? Good to see you. Jared says, lots of OT this week, so I'll be looking forward to some DCAing. Let's go, Crypto Fam. Rob's a goat. There you go. Yo. I'm here from Local Bottom for the Local Bottoms. There you go. Beebs, what's up, buddy? Showing love on both channels. I appreciate you, man. I appreciate you. Kizza says, comment. Zbeck to $10. Zbeck to $10.05. How about that? I love YouTube. YouTube is amazing. YouTube is the best platform. Liquidity, what's going on, Rob? I've been able to keep up with the streams when I'm not at work, luckily, because you told us the times your streams, but man, this algorithm doesn't tell me squat when you go live. Yeah, they're shadow banning the channel right now, so we really got to work hard, guys. We gotta make that extra effort to click the like button, because YouTube is in fact shadow banning the channel. So help us out, help us beat out the algo. That would be great. Game Cash, just grab some more Nadix. Like I said last week, McRib is back. There you go. I dig it. What's going on, my dude? The morning after guy. What's up, brother? Mario, the only bad words I've heard you say has been Jerome Powell. Well played, my friend. Well played. Jesse and James, what's up? Happy to be here and always smashing the like button, even on the reruns. There you go. That's what I like to hear. Crypto Rob is my name. I'm ahead of the game. Let's get it. That parabolic stage needs to come fast so my wife can have me back. Even my kids know your voice now. Awesome. Eric, what's going on? EI Rick, what's going on, buddy? Run to the fridge. Danny, what's going on, my guy? Good to see you, brother. We are officially caught up in the chat, guys. Holy smokes. That is how slow it is today. We have 165 people watching. We have 45 likes. Let's see if we can press 100 likes, guys. Let's see if we can get it. Let's push our luck. Let's get into the news. Maybe people will join along the way. So this is what we're watching for on Bitcoin. A close above 116,445 would be good. A close above the 30-day SMA sitting at 117,306 would be optimum. And breaking above, which isn't going to happen today, but 118,671 would be fantastic. Big C says, everyone knows when future is on in the house. There, there you go. Am I that loud? Very nice. You like it. All right. Let's cover the news, guys. Quick shout out to the channel sponsor, as always, Decent Biometric Wallet. Not your keys, not your coins, guys. Use my link down below, helps the channel out, and you get a 2-for-1 deal on the biometric wallet, guys. Check it out today. You can swap, take profits, and even stake on your Decent wallet. Use our link, get a phenomenal deal. Phenomenal. All right, let's check out what's going on across the cryptoverse, shall we? Okay, so why crypto prices are crashing today. One major reason why crypto is crashing today is global political uncertainty. A high-profile White House meeting involving Donald Trump and Zelensky and EU leaders is scheduled to take place. The topic? The possible peace deal. Some believe the resolution is possible, while others remain skeptical. This mixed sentiment is fueling confusion in global markets, and crypto is no exception. As we've seen many times before, uncertainty is the enemy of investor confidence. And this has led to a sharp sell-offs across major cryptocurrencies. Ramona's in the house. What's going on? Our crypto mom is here. Another big factor behind the sudden crypto dip is the leverage flush happening across major exchanges. Over the past 2 weeks, Ethereum surged by 50%, and altcoins followed with gains of 50 to 100%. This rapid rise tempted many traders to enter over-leveraged positions, expecting further gains. But markets rarely go up in a straight line. With excessive leverage building up, exchanges are now forcefully liquidating positions, a common tactic to shake out weak hands and reset the playing field. Once the flush completes, smart money is expected to buy the dip, potentially leading to a stronger recovery. A week ago, markets were fully expecting the Fed to cut Federal Reserve rate cut in September, with a 100% probability, but that optimism has faded slightly due to fresh producer price index or PPI data, dropping the odds to 84.8%. This small shift may seem minor, but for highly sensitive markets like crypto, it's enough to trigger a sell-off. Investors are recalibrating their expectations, contributing further to the current downturn. Today's White House meeting could remove much of the political uncertainty currently spooking the markets. At the time of press, most analysts are expecting a rate cut to go ahead in September. The current price drop appears to be strategic shakeout, giving institutional investors a better entry point before a possible market rebound. For retail investors, this is a time for caution, not panic. History shows that dips often precede strong rallies, especially when driven by temporary fear and technical resets. Big Kev dropping that cheddar again. Market down, portfolio still green because I follow Rob's Patreon. Boom, boom. That's what I like to hear, brother. That's what I like to hear. Thank you so much. Kiza, do people really sell ZBIC and other coins when geopolitical things happen? Yeah, there are so many people who are emotionally shocked when something happens. It's crazy. That's why I try to be the voice of reason, but a lot of those people have to learn the hard way, right? H Barbarina in the house, Lion in the gym. There you go, brother. I'm heading to the gym this afternoon. Probably 2 hours from now, I'll be heading to the gym. I got some Patreon coaching calls to take care of, and then I will be out the door to the gym. Got to get those gains, brother. Says, hit the like button for Rob, folks. Don't kick him in the nuts. Kiza, I really think most of crypto trading is carried out by AI bots now. That wouldn't surprise me, brother. It would not surprise me. All right, let's segue over to Squawk Box and see what's going on there. Reshaping industrial policy. Should the U.S. government be investing in sectors?
Democrats are asking President Trump to reconsider his decision to let NVIDIA and AMD sell AI chips to China in exchange for a 15% cut of revenue. The letter signed by Senators Chuck Schumer, Mark Warner, Jack Reed, Elizabeth Warren, and others. They're requesting details on that arrangement with NVIDIA and AMD by this Friday. We should mention that in those letters, the lawmaker said that President Trump's deal amounted to America negotiating away its competitive edge, critical to national security. They're also warning that selling advanced AI chips to China could strengthen that country's military. Meanwhile, plans for the government to take a stake in Intel could reshape industrial policy as well and national security. Joining us right now, former Trump economic advisor Stephen Moore. He is the co-founder of Unleash Prosperity, also former Biden Treasury Secretary Natasha Sarin. She's a professor at Yale and the president of the Budget Lab. What did I say? Oh, official, I should say. Yeah. Could be the Treasury Secretary.
That'd be a big promotion.
Natasha, nice to see you. Congratulations on the elevation.
Yeah.
Nice
Steve,
we hardly knew you.
I want to start with you, Steve, though, because I'm curious how you think. You've been a free marketeer. I do not believe you've been somebody who's believed in industrial policy over the years. And here we are in a moment where clearly we are careening towards that world.
Yeah, you're right, Andrew. I'm a big enemy of industrial policy because it's never worked anywhere or any time. The free market has been much more productive in terms of creating great industries for the United States. And by the way, we have a really good example of a failed industrial policy in the CHIPS Act, which was passed by Joe Biden and was supposed to revive our chips industry. And if anything, it hurt our industry more than it helped it with the subsidies. So I don't want to see. Now, there is and I'm not a national security expert, so I want to be clear about that, but there is some national security portion of this that may justify some of the subsidies that they're talking about. But with respect to making America #1 in artificial intelligence, I want the government to stay as far away as possible, just like they did in the internet age, which created, the Magnificent Seven and trillions of dollars of increased wealth for Americans.
Natasha, what do you think of what's happening here?
So, Andrew, we've gotten to talk some about industrial policy and the varying ways in which we might choose to shape the economy and encourage more production in the U.S. of certain types of goods. I actually think I disagree with Stephen in the case of semiconductors and chips. We are talking about pretty significant national security exigencies, and the idea of being reliant on China, an adversary in this way, and then having such control over this particular type of technology seems like deeply concerning. And so I think we still have to kind of learn a bit about what the specifics are with this potential stake in Intel and what it'll look like. But the idea of industrial policy in targeted areas where we're concerned about national security actually seems like quite good policy to me. And indeed I also disagree with Stephen on the CHIPS Act and think that that was an important step in that direction.
But Natasha, isn't this so interesting? This sort of strange bedfellows, everybody reversing, right? So you have, Schumer and Elizabeth Warren and Democrats who historically have actually been to some degree for industrial policy, right? Now, and by the way, for higher taxes generally for corporations and the like, now basically taking issue with the president over what historically, to some degree, they have liked. I mean, there are some people, critics would look at it like that.
So I think the thing about, and we've talked about this before, but the thing about industrial policy is we really have to be honest about what the trade-offs are. Industrial policy isn't always good. It doesn't always mean economic growth. It doesn't always mean lower costs for consumers. And it doesn't always mean in better national security or less reliance on our adversaries. And that's why I think the idea of being sort of forthcoming about those types of trade-offs will lead you to the conclusion that in narrow areas of the economy where these national security exigencies are really quite significant, that's exactly where we should be talking about industrial policy. It's not for manufacturing writ large, it's for chips. And I think that distinction is pretty important, Andrew, and one that sometimes is missed in these debates.
I think it's more interesting.
Can I just add one point?
Hold on, Steve. Hold on. I think it's more. Okay. Hold on. I think it's more interesting that our two guests here are fair as foul and foul as fair. I understand the Democrats. Anything Trump does, they're going to write a letter that they hate it. But Natasha is our liberal person, and Steve Moore is our former Trump guy. And Steve Moore. But the Democrats, that's not interesting. Of course they're against it. It's Trump. They would, but Natasha just said you think it's pretty good policy, huh? And Stephen Moore has got his panties are all, or his You're not allowed to use that anymore, but you're all bunched up in how horrible this is. Couldn't it be, Steve, this is an emergency, that we have a foundry here that we need, and I think that's what Natasha's point was, we need to have the ability to manufacture chips here. And that was the idea of both.
That's the CHIPS Act, Joe.
That's the CHIPS Act. And this is like a corollary to that. It could be an emergency.
So let me take you all back to a little over 40 years ago when I first came to Washington in 1982. The big issue back then was America needed a national industrial policy, not to defeat China, but you know what country it was we were worried about back then? Japan. And Japan was going to take over the whole world because they had a national industrial policy, we didn't. And then we avoided that route, and we went with the free enterprise system and free markets. And look at the world today. Our stock market is up 40-fold, and theirs has been flat. So countries that have tried industrial policy, look at Europe. Europe is the case study for industrial policy, trying to nurture certain industries.
So you think China's going to bring itself down?
So show me where it's ever worked. Show me where industrial policy has ever worked.
Steve, you think we don't need to worry about China? If that the extension of what you're saying is we don't need to worry about China because they will bring down themselves by overextending themselves and coming up with policies that don't make sense overall.
Well, let me be clear on this. I do think we have to worry about China. China is a very dangerous country, no question about that. What I'm saying is we will defeat them through our free enterprise system. They have a communist, centrally planned economy. Somebody show me anywhere in the history of the world where that has worked. So, you know, look at you guys are worried about this. Look at we got the magnificent 7 countries all here in the United States. They're worth more than virtually all the companies in Europe, in China combined.
I think the American economy is great. I think capitalism is so important, and I think we are so competitive vis-a-vis the rest of the world. I also think it's a problem that 90% of rare earths are processed in China, and I think that these are real concerns from a national security perspective, and we need thoughtful policy to address them. So I'm kind of heartened, frankly, to be seeing some of these discussions play
making
out.
sense to me. Natasha, I'm on your side.
Talking national security decisions, and Steve, you pointed out at the top, you're not an expert on national security. I mean, these are where, you know, tough issues and tough decisions come down to it. I don't like picking government winners and losers, but I don't like feeling like we are beholden to one country or another when their interests are directly opposed to ours.
But if we want more industrial production here, we did something very important that every Democrat voted against, which we're allowing businesses to immediately expense their capital purchases, what they can use to develop chips here in the United States. That was a great policy.
I agree. Immediate expensing is a great policy. I disagreed with other aspects of that bill that involve $3 trillion of deficit finance tax cuts to the top disproportionately. But I'm with you. I think that's good and important policy, as I think these conversations about industrial policy in the national security context specifically really are.
Joe's a Democrat.
No, it's just, Andrew's right. There's not a day that goes by when things aren't flipped.
Flipped. This is totally flipped. This is like a flipped situation.
But President Trump. I mean, there's not. But Moore never flips. He will never flip.
God bless you, Stephen, for not flipping.
Joe, this is the CHIPS Act. I'm not flipped. This is what we believe in.
I got a question for you, Steve. You obviously spent time with the president. You were in the White House with him, showing on the easel some of the numbers. Have you had this conversation with him directly?
You mean on this particular issue?
Yeah.
With respect to the chips, no, but I did tell him that the incomes have been way up so far in his first 5 months in office, $1,000 increase, which was about twice as high as we had in 4 years under Biden. So look, I mean, I'm really bullish right now. Look at the headline today, Andrew, of the Wall Street Journal. Earnings are up almost across the board. What would investors not like about this picture?
Got a point. It's got a point. All right, let's keep this party rolling. Big Mike supporting the channel as always, man. I can always count on you, brother. I can always count on you. Patience is key, family. Everything will play out. Don't sell your bags due to frustration. Yes. Be cool, be chill, put your feet up, touch some grass. Go make a baby. Whatever it is you got to do to distract you from your portfolio, that's what you're going to want to do. What do we got here? try to catch up on the chat a little bit. You mentioned on the last live that you will be buying heavy in 2027 at bottom. What does that mean for 2026 on the way down? No, there will be opportunities in 2026 across all markets, right? That's why you got to play things by ear, guys. Got to play things by ear. You got to be paying attention every single day. It's a boxing match on, yeah. What happens in the Patreon stays in the Patreon. Yeah. This is Fight Club. First rule about Patreon, you don't talk about Patreon. Any suggestions on how to start getting notifications again? Like we just said, David, like Kizza said, ask over on the Patreon. I love it when I'm able to catch you live with my extra powder on Thursdays. I will be joining the Patreon. Hit the likes. Can't wait to see you over there, Ray. Can't wait to see you, brother. I'll be looking for you on Thursday, man. The Count. They confuse Wall Street with Main Street, the middle class, getting lower class into the middle. Yes, yeah, absolutely. Absolutely. Wall Street pumping is not Main Street growing. Yes, exactly. But they have to say it because it sounds good on TV, right? Added 5 more mil Miria over the last week. Nice. There you go, man. Cody says, smash that like button. Absolutely. Milk money. Double the likes for double the gains. Let's get it. You got to pay double for that kind of action. We got 215 people watching. We have 80 likes, guys. 20 more. Let's push it up to 100. Let's push our luck. Why, Sean? Yeah, go make a baby. You're funny, Rob. Keep it going. U.S. stock market faces crucial dip. What investors need to know. Let's talk about it. All right. The financial world observed a notable shift today as the U.S. stock market commenced trading with a downward trajectory. Its initial dip captured attention across the investment landscape, signaling a cautious start to the trading day. For many, understanding these immediate market movements is crucial, as they set the tone for the broader economic narrative. Today's opening bell saw primary indices reflecting a slight decline. The S&P 500 registered a modest 0.11% decrease, which the tech-heavy NASDAQ composite also saw a 0.07% drop. Furthermore, the Dow Jones Industrial Average moved lower by 0.14%. These figures, while small, indicate a collective sentiment among traders and investors at the start of the session. Several factors can influence such an immediate market reaction. Often, these include anticipation of upcoming economic data, shifts in global geopolitical events, and even pre-market trading activity responding to overnight news. While specific triggers are not always immediately apparent, market participants frequently react to prevailing economic uncertainties or the latest corporate earnings reports. This collective response shapes the initial direction of the U.S. stock market. Stargazer, what's going on? Good to see you, man. Good to see you. I'll look at Gary in a few moments. Let me get through this article for you. When U.S. stock markets open lower, it naturally prompts questions for individual investors. A slight dip today, like today's, might not significantly impact long-term portfolios, but it serves as a reminder of market volatility. Short-term fluctuations are a normal part of investing. Therefore, maintaining a long-term perspective often proves beneficial. For those with diversified portfolios, a minor downturn in one segment might be offset by stability or growing in another. That's why being diversified matters. However, investors holding heavily concentrated positions in affected sectors could see more noticeable, albeit temporary, impacts. It is important to remember that the market movements are complex, and short-term dips do not necessarily predict long-term trends. Something to keep in mind for all of you people panicking today. Understanding how to react to market dips is a vital skill for any investor. Again, bears, people panicking, people are upset, people who are emotional. Take note of that, okay? Again, I'll read it again for the people in the back. Understanding how to react to market dips is a vital skill for any investor. Panic selling often leads to losses, whereas a calm, informed approach can lead to better outcomes. Here are some actionable insights. Stay informed. Review your portfolio. Consider dollar cost averaging and focus on quality. If Rob's not panicking, I'm not panicking. There you go. Exactly. These strategies help investors manage the inherent challenges of market volatility, allowing them to participate in the growth of the U.S. stock markets while mitigating potential downsides. The initial lower openings does not definitively forecast the entire day's or week's performance for the U.S. stock market. Markets are dynamic and can recover throughout the day or continue their downward trend based on unfolding news and trading volumes. Experts often analyze various indicators, including economic reports, corporate announcements, and global events, to form a more comprehensive outlook. Mirdid, I see you, brother. I see you. Staying patient and avoiding emotional responses are paramount during such times. While today's opening presented a slight downturn, the broader economic picture and individual company fundamentals often dictate a long-term trajectory. Therefore, investors should focus on their predefined strategies rather than reacting to every minor fluctuation. God, this is such good knowledge and education for all of you emotional ones out there right now. You need to be paying attention to what I'm saying right now, right? Today's lower opening in the U.S. stock market serves as a timely reminder of the ever-present ebbs and flows of financial cycles. While the initial dip was modest, it underscores the importance of a well-thought-out investment strategy and a commitment to long-term financial goals. Informed decisions coupled with patience remain key principles for navigating the complexities of the market. Understanding these dynamics empowers investors to approach market movements with confidence and clarity. So guys, that is for all of you emotional people out there right now. And I know some of you are sitting there right now going, yeah, but you got the yeah buts. Sit down, shut up, pay attention, right? That's what you need to do if you're emotional. Stop with the yeah buts, stop with the complaining. Be focused. Do not be emotional, right? YouTube's acting like a player hater. Yeah, I know they hate the player, not the game for some reason, man. DCA guys, or just sit on your hands. Patience is key. Absolutely. Count always. Okay, so yes, Stargazer wanted me to look at Gary. He wanted a price target on Gary. Gary. Uno momento, por favor. Yeah, nobody is getting the notification when Yabbit coin trending. Lord of the Realm, what's going on, man? Good to see you. All right, so what do we got right now? Yeah, Gary's taken a pretty big hit lately. I told you guys it was going to. I would probably target somewhere around 15 to 20 cents for Gary is where I would target. Something like that. Yeah. All right, let's keep it going. Let's segue back over to Squawk Box and see what's going on. What else do we got? Retail earnings on deck. BCI brands Manny Chirico on I get the hiccups. What to expect? Tariffs accounting for margins.
Joining us right now with more on the retail sector is Manny Chirico, LNK partner, BCI Brands chairman, and former PVH chair and CEO. Manny, first of all, thanks for being here. Why don't you break this all down from us? For us, what are you going to be looking for from these earnings results? How much do you think we'll see on the tariffs front? How much do you think we'll see about the strength of the consumer?
I think business has been good through the second quarter. It's actually gotten better as the quarter got on, and back to school is off to a strong start. I expect second quarter earnings to be good pretty much across the board. I'm sure there'll be a few exceptions for underperformers, but I think but I do expect the guidance for the second half to be muted and conservative.
Why?
I think you'll, well, because of the tariffs. I think we're looking at, especially in the soft good retailer, footwear, apparel, accessories. What you're going to be seeing going forward is tariffs averaging somewhere between 20 and 25%, and that is a cost that the retailer is going to have to deal with. I think that the wholesale companies, the manufacturers overseas, the importers, are eating about half of that in this next 6 months. A combination of the retailer themselves and the manufacturer overseas. So I think you'll start to see prices increase anywhere from 5 to 10% in the back to school season, and particularly in the holiday season. And then I expect that to continue with price increase in the first half of next year, as those prices all start to roll their way through to the consumer. I just don't. There's not a big enough profit margin for everyone to hold on and eat those tariff costs going forward.
You know, I think a lot of people assume that we will see in the most recent reports the impact of the tariffs, but there is this issue of how much was pulled forward, how much they brought in ahead of time, how much they've been able to dodge some of them, and with the tariffs maybe not fully kicking in to some of these goods. I mean, this is the big question with Jay Powell, the chairman of the Fed. Will we see inflation at this point, or you think it's really just something that's slowly starting to wind in right now with back to school?
I don't think you're going to see inflation significantly in the retailers' margins in the second quarter. I think you're going to see the guidance where they start to talk about cost pressure and raising prices. And then the whole question about is how the consumer reacts to that. You know, I think you'll look, the big box retailers, I think have the scale and a much more diverse basket that they can manage it pretty consistently. Specialty retailers and department stores, all soft goods, they're looking at tariff increases, and that those payments are due immediately on entry into the country. It's a seasonal business, so through July, minimal goods have come through with real tariff impact on them. But starting August and beyond, back to school, you're going to start to see the margin pressure, and as we get into the fourth quarter, you should really start to see the margin pressure. And I think you're going to see ticket prices across the board up anywhere from 5 to 10%. And what you'll see is planned promotional markdowns and discounts that'll be worked into the model, assuming that the consumer will push back a bit. So I think the earnings reports are going to be fine in the second quarter. And even the full year guidance, I think the retailers will manage it, but they're definitely going to be seeing pressure on costs in the second half of the year.
Let's talk about some of the retailers reporting this week. Target, Walmart, Gap, you've got Macy's reporting too. Who do you expect to be winners? Who do you expect to have a tougher time dealing with not just what they can get into the stores, what they can charge, what they can eat in terms of the tariffs, but what they mean to the consumer too?
I think Walmart will continue to perform. The sense I have, and I don't have any insight into this, but the sense I have is their sales have remained fairly strong. They've started to see a little bit of the tariff pressure in the second quarter, but it's been minimal. I think that will intensify in the third and fourth quarter. So I think their guidance will be conservative going forward, but I think their second quarter results will be solid. I think you mentioned the Gap. I don't want to pick on them, but I think the specialty retailers, their results may be fine through the second quarter. But again, just to say it again, I just think they're going to be under margin pressure in the third and fourth quarter. And I think they're going to plan for it as they go, when they're giving guidance to the street. Everybody wants to under promise and over deliver. So I think they're going to build in some level of margin compression for the second half of the year.
And Manny, very quickly on Target and Ulta, the partnership that they had formed, that is, they're going to be going their separate ways. What does that mean for Target?
Okay, I think in that situation, strategies really just weren't aligned. I think, Ulta is a high-touch consumer service model dealing with the consumer, And Target is a value-oriented retailer, minimal customer support and service, store presentation. I just don't think the strategies were aligned. I think Target will have a harder time dealing with it. The availability of brands at Targets will be more limited. And I think just the presentation will not be as strong. They'll look to make it up with value. But I think I think in this environment, they're going to potentially lose that higher end consumer that goes in there, that discretionary shopper. So I think they'll have more of a challenge to deal with it over time.
Interesting. Will it take all the way until Q4 before we start seeing the effects of the tariffs from Q3? Interesting. Ramona in the house. Don't be a panicking. Hit the like button. Yes, absolutely, guys. Absolutely. Don't be panicking. Don't be a panicking. And also hit the like button. What do we got? We got 234 people watching. We're at 97 likes, guys. 3 more. Let's get it. Let's push it up over 100. What else do we have here? Do you think the last bit? I think it could have been edited. Like a lot of times, what people do now is they write articles and then they have AI edit the article, right, to reword certain things and stuff. But yeah, I think it could have been edited by AI. Cody says for only $2.50 a day, you could join Rob's top Patreon tier. I just realized, so I upgraded. Worth it. Absolutely, guys. It's the price of a cup of coffee. If you're not willing to invest the price of a cup of coffee into your education in this space, how do you honestly expect to become a multimillionaire, to become, wealthy in this space? You're not even willing to invest a cup of coffee in your education, right? How can you say that you take it seriously, your education in this space? I don't understand. Come aboard, guys. The link is in the chat. It's in the pinned comments. It's in the description. OG, what's up? Me too. Yeah. K Lily in the house. What's going on? Overcome. Good to see you, buddy. Good to see you. AI taking over crypto and the world. Yes, come with me if you want to live. All right, what do we got? Ethereum supply shock incoming. Is $6,000 next? Ethereum climbed near its 2021 all-time high earlier this month before macroeconomic headwinds from the U.S. triggered a pullback. Still, analysts argue that broader trends remain bullish, driven by heavy institutional inflows and tightening supply. Japan-based XWin research highlighted that Ethereum reserves on exchanges have dropped sharply since late July, with daily withdrawals often surpassing 100,000 Ethereum. The largest single move saw nearly 93,000 Ethereum, or $412 million, leave Kraken in just one day. Spot Ethereum ETFs are playing a central role in the rally. According to XWin, ETFs recorded a record $2.85 billion in weekly inflows, adding to the pressure of dwindling exchange balances. Currently, just 18.4 million Ethereum remain on exchanges, underscoring the growing scarcity. Cody says less than a price of cup of coffee. Absolutely. Why so much Ethereum's being pulled from exchanges while institutional buying accelerates? Conditions for a supply-driven bull market are strengthening, the firm noted. Coinbase head of research David Dong echoed this outlook, pointing to the role of Ethereum treasury companies in accumulating large holdings. Since the start of August, digital asset treasuries have purchased roughly 795,000 Ethereum, worth $3.6 billion, equivalent to about 2% of the total circulating supply. He added that these firms are likely to continue accumulating, a trend that could amplify Ethereum's next breakout and drive the market towards new highs. That's also the non-whiny level code. Exactly. Very, very big things popping, guys. Little things stopping. What else do we have here? All right, let's go back over to the Bitcoin chart. Alex says investment in education seems expensive till your first winner pays for it. Don't catch Rob all the time, but if I had to listen earlier and listened then, I am retired now and I just started this year. There you go. Exactly, guys. Just the swing trades that we do alone over there for the price of a cup of coffee a day. Seriously, if you win on one swing trade, it covers your Patreon membership for years. Are you kidding me right now, right? David, Rob, are you familiar with Marty Party and his takes on market manipulation? Interesting takes. I have heard the name Marty Party a lot. I don't think I've ever actually seen. Is that a YouTube channel? Maybe I'll have to check it out because I've never watched, honestly. I've never watched, but fascinating nevertheless. If you say that he has interesting takes, I will certainly give it a looky-loo, right? All right, so looking at the Bitcoin chart once again, $116,300. We got to get back above this blue line at $116,444. That's what I want to see for the daily close. We still have 4 hours to go before that daily close takes place. So we'll see how it plays out, guys. We will see how it plays out. And we could go back over to Ethereum real quick and see what's going on over there before we shut it down. All right, so ETH, let's just do a reset here, refresh, make sure we're good. Make sure we are good. ETH above support right now. Very nice, very nice. Yes, you like it. You like it. Yes. So I want to see Ethereum close above $4,332. Right now we are above that level. Absolutely fantastic. So that's what you want to see, guys. Anything else in the chat? Sharon says, when ETH next leg up? Yeah, soon enough, guys. This market's going to, listen, let's check the poll, actually. We did a poll. See what everybody thinks. The poll question is, will the rest of the week be green or red? And 52% of you guys think it will be green. 22% of you think it will be red. 25% of you think it will just be sideways choppy action. So the greens have it. Will we see a green week ahead? Probably, I think yes. But again, we'll play it by ear. Kizza, 4 days, 15 minutes. Marty Party. At Marty Party Music. I'll have to check that out. Sue says, I joined your Patreon a few months ago and I love it. It's a great group and it's already helped me increase my portfolio. Highly recommend joining. Do it. Thank you, Sue. I appreciate you so much. So yeah, we'll keep an eye on Ethereum, but the next leg up, she is coming, in my opinion, guys. But I got to get over to the Patreon. I do have some coaching calls to do. If you want to get yourself into some of our coaching calls, go ahead, jump aboard. The link is in the chat. It's in the pinned comments. It's in the description. They're absolutely free as a Patreon member. So jump aboard, book yourself into our coaching calls. Check out our swing trades and our exclusive content, guys. We also do a morning market overview every single day now as well. Every single morning, first thing in the morning. Check that out and so much more. Join me and thousands of other members today, guys. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.